Start recording. Good evening, guys. You're welcome to another section, and we're rounding up this particular course and this particular journey in a short while because we're getting into the part where we'll be refining our edge even more, and all the confluences are coming together. And in no distance time, we're all going to be independent, the traders, right? So, without further ado, let me dive into what we'll be doing today. Today, we'll be talking about what we already know, which is the fair value and the imbalance. So today's topic is the word fair value and imbalance zone. The objective of this class is by the end of the class, every student will be able to understand what a fair value gap is, identify a fair value gap in real-time market structure, distinguish between valid and invalid imbalances, use fair value to define entries and exits, combine your fair value gap with your order block liquidity and a break of structures for your sniper entries. Now, our lecture notes goes like this. What is fair value gap? What is fair value, right? That's a question you want to ask yourself. A fair value gap is an imbalance in price caused by an impulsive move that skips over price levels without offering the market a chance to fill orders fairly, right? Because it must always be what there must always be a fair market between the buyers and sellers. But most times price gets to be what gets to spike up aggressively, and it skips price level over price levels, just like we see here. Now, think of it as an area where buyers and sellers did not get a fair deal. Price moved too fast and left behind a gap. So, how to identify fair value gap? You want to look at three consecutive candles. The gap exists with when the wick of the candle one is not overlapped by the body or wick of candle three. This shows that price moved quickly, leaving unfilled orders between what candles. Fair value gap equals zones between candle one's high and candle three low in a bearish movement, while candle one's low and candle three high in a bullish movement. So this is something I've talked about like severally. We've done this. I have notes and have videos on this. I'm still going to share that with you because it's a different concept compared to this one. Um, Why do price return to fair value? Big players institution need to return to fair value zones to what field unexecuted orders, mitigate drawdowns, and what maintain price balance. There must always be price balance. For every efficiency, there must be what? For every inefficiency, there must be an efficiency or an efficient market, and for every one imbalance, there must be a balanced market. So price usually retraces toward fair value before continuing in the original direction. Number four, we have the valid and versus the invalid fair values. How do you know a valid fair value gap? You know it appears after a break of structure or liquidity grab. That is how you know what a valid fair value. And it is found in a trending market. The market has to be trending. A consolidating market tends not to give what really good fair value, and it must be inside what a premium or discount zone. When you see a fair value gap inside of a premium or discount zone, it's very good because it gives you opportunity to enter that zone and what either make good profit from it. It's an A plus setup, you know. That's what must have has a clear impulsive candle movement. So you want to see something that goes really aggressive like this. You don't see something like this, right? This is a choppy movement. There's no word fair value here. You want to see something that words goes like this, really aggressive, words impulsive move. Yeah, if it's on the upside, impulsive move, right? This is the best thing if it's trending upward, right? Or if it's trending downwards, you want to see impulsive move to the downside, right? You want to see something aggressive, right? So that's what we're looking at. And invalid fair value gaps appears in consolidation, like I drew out earlier. You don't see something like this. This is an invalid what fair value gap, right? Doesn't align with structure or liquidity. if your fair value works, if your market is trending upward and you see a fair value gap around this corrective move or pullbacks, it's not advisable to get in because you get overrun by price eventually. So, already mitigated or filled. So when the market has tapped into that zone, maybe let's assume this is a fair value gap right here. This is a fair value gap. And, price has been moving in this manner, right? Creating like this kind of structures. And the market has tapped into it before and market like went aggressive. It's very bad if you still want to use this area. It's been mitigated. So what you anticipate is maybe the market comes to another level like this and push. It's never going to come back in because this guy has got it covered, right? So how to trade fair value gaps, the cheating method, like I'm teaching you the edge. You want to spot break of structure or a liquidity sweep around that area. You want to mark out the impulsive candles move, that's in form of a order block. You want to identify the three candles that's an FVG zones. Wait for price to return to the fair value, drop to the 15 minutes or the M5 for confirmation, change of character. That's a lower time frame shift. Will be inside of what's the fair value. You want to see an order block, and also you want to see below the fair value or above the fair value. You want to see your RSI divergence aligned, and you want to enter your SL outside of that zone and TP at the structure or liquidity zone. This is the concept I teach. All of this have my entry model, right? Then the tips I have for you guys. Fair value works best after a break of structure or liquidity sweep. The first step is usually the best entry. Use multiple time frame confirmation. That's like we talked about the top-down analysis, multiplying market dynamics. Then fair value inside and OB, that's another block, equals high confluence sniper entry. That's like an A plus setup. Add RSI divergence on lower time frame for sharp entries. So this is what your bearish fair value looks like. I've done a candle representation of this over time, and I'm going to do another one again. Then we have an assignment for you guys, which we're going to revisit later. So now, let's look at what a fair value looks like based on how to identify fair value, our definition, and how to identify it. So we're going to be doing for bullishness and our bearishness. So this is bullish. So let me just reduce this guy to like 14. No, 16 is better. So this is bullish fair value, FVG, right? We're gonna have this, and you'd definitely see the market in this sense. The trend line. This is a fair value. Let's replicate this. All right. All right. We want to have this guy. So this is gonna be what green. Let's make this thick. And this guy. Now you can see candle one and candle words. Candle three do not touch. Right here. Let's put 1, 2, 3. Vice versa. How you want to do it. 1, 2, 3. Right? Candle one and candle three should not touch according to how you can spot it, right? Then let's go for the bearish fair value. Let's make this guy 18. Yes, so let's mark out the bearish fair value. Let's use these guys still. Let's bearish FVG. All right, so you want to have this guy down here. Start first. This guy up here. I'm going to do this guys. This one's Very big feeling this guy. Very, I'm not the so this gonna have this guy like this, but this can like this. That's exactly this. Let's learn how to do this kind of stuff. So remember how we did it? Number 1, 2, 3 should not touch. One, then go two, and what? And three. So the low of this guy and the high of this guy should not meet because this is what's your fair value, the distance between both of them. So I'm just going to use this guy and put this here as a fair value. I've not have done this before. All right, so let's going to use blue. Blue is going to take out this level, this gap. We're following the week. Oh, the week is here. This is going to come down like this. You understand? So they must not overlap. So far this week does not touch this candle what? Candle three. That's not on the same level. If it's here, it's even good. If it's still here, it's fair value. If it does not touch, I'm just doing it as a reasonable level so we can really understand this. So let's just extend this like this. I've got this guy FVG. He's imbalance. IMB. IMB. So this is 20. As an IMB, this is a fair value gap, right? IMB imbalance in the markets as a fair value. So there has to be an agreement. And same thing with this one too. You can see it. Take it from this level, this one to this level. All right, so this is what your fair value looks like an imbalance. And this is how you can take your trade. If you are going to use this with an order block, you would always see something like this. Just going to clone this guy again. Right? Clone this guy too. They're going to use it as an order block. Normally we see something, actually we see something like this. But let's go a little bit lower. It's long. They want to see something like this. Right, so this guy, long, long, it's like, see, I'm doing all of them the same size now. It can be different though. You can have something like this now. Understand? This one coming down like this, right? Then we have this guy. This one from the start with. See something like this. All right. How do you know this is a fair value gap? You actually have something like this. All right. So you're anticipating your fair value, right? Let's just mark this out. Uh, one, two, you get three. That's the third candle, right? So you want to see candle one and candle three, which should not touch, right? You can see it clearly. It did not touch. This is candle three. Take it to candle one. There's a fair value there. You extend, no matter how little it is, consider fair value. We're just gonna keep this here and keep this here. So this is an imbalance in the market. Okay. Don't confuse fair value and imbalance are the same. It's just fair value is the agreement, imbalance is the action that was created. What is they're going to try and correct. Okay. So I think this is not going to be a key thing. So now this is what the imbalance, right? You can see the imbalance in the market. Then where is your order block, right? We already know that this is an imbalance, this angle, right? Is an IMB, imbalance. So where is the order block? Order block is the range before the aggressive push that broke structure. So this is the order block. Like we said earlier, order block must what have a fair value sitting above or below it. Like we want to have a valid zone and a valid entry zone. So this is a bullish order block, right? That's kind of before the aggressive move that broke structure. Now they call this a demand zone. Demand zone. So if you're straight now and you're at any point in time, if we assume that the structure has been broken on this level, right? Your S breaker structure. Want to assume a structure has been broken. That we had a market run in this direction, like something like this. The market was given and and the market created this new low, and this one broke structure completely. Variable structure. Let's sustain this to this level. It can be assumed that this would at some point in time was trade lower and what targets in at this level and what give an aggressive candle upward. So you're going to be seeing something more like this. You'll see something like this, and like this. You'll see something like this. I'm just going to exaggerate this and I assume it's what's the price. Maybe it's the news events that came in. So you're going to see another break of structure, right? All right, so that's what you're going to do. Okay, guys, so this is what it's going to look like. You've bought the market. You got into your entry, and the market has pushed even higher. So this is going to be your your entry level. Let's do this. Entry. All right, so entry position. What is the word entry position? Oh, entry for long position. So that gives clarity. So this is where you're going to enter from. Same is a man zone, going to be your entry. And you want to see the markets rally even higher, right? You want to see the markets rally even higher. So the market tends to keep going higher. Then another what fair value gap has been what introduced the market will what trade lower, tap into that level and will keep going higher. And that's keep like a continuous break of structure to the upside, bullish momentum. Let's assume this was a change of character and not really a break of structure because of where the market is coming from. So just for context sake. All right. All right, I think that's way much better now. But I'm not going to do the bearish version of this. You guys will be the one to do it for me. I want to see this replicated in the bearish manner. I want to see a supply zone. I want to see the fair value gap, the imbalance, and I want to see the order block for a supply zone. Okay. Now let's go back and read everything we've studied so far. So we said what our objective is to be able to, what at the end of the class, students to be able to understand what a fair value gap is. We understand that a fair value gap is an imbalance in price caused by an impulsive move that keeps over price levels without offering the market a chance to fill orders fairly. We're going to be able to identify fair value in real-time markets. We're going to get to that. Distinguish between valid and invalid what imbalances. We've already been able to do that. This is what a valid imbalance, right? This checks out 100%. Let's see if we can get some check. This checks out 100%, right? This is valid. This is valid. How we see an invalid is if, let me just do something quickly. How this becomes invalid is if at any point in time, let me see something like this. See something like this. Let me see something like this. How this is invalid is if you see something like this, price moves in this manner, and this week what comes here, what and closes with what candle what candle one. So this is invalid. Let me just show you. Means that price has been what efficient here, and there's no inefficiency in the market. Means price is what 100% closed, and that is not interested area for anyone to want to agree with. So like price did not keep price closed clearly. And and we see this a lot happen. So I'm not going to do the bearish version. I'm just going to do this for us. This is an invalid level. Invalid what? FVG. An invalid bullish FVG. Right, let's use that instead. Invalid bullish. Bullish FVG. So this is invalid, right? Same thing you see if you see at any point in time your order block does not have what a fair value, it is not going to work. Or that other block will not hold to just manipulate you into getting. So this is what the valid order block OB. Okay, guys. So this is what you want to see. This is invalid. So I'm just gonna use my marker and let's take it back. All right. So this is invalid. Why this is valid towards uh order block. Those guys are valid. Valid. All right. So guys, we've been able to do that, and now set use FVG to refine entries and exit, combine FVG with other block liquidity. We've been able to do this with this and what break of structure, but yet we're not been able to do it with liquidity. In our next class, we're going to be doing that. But it's very easy because under this level, you'd likely see words equal lows and equal highs. Like this level now, at some point in time, maybe on the lower time frame, you're going to see liquidity in form of equal lows around this level, represented by this candle, which can linger and make price come back there towards get interested. So you're going to just see it as liquidity. So we're just going to reduce this down to like 12. All right, guys. Just to incorporate that. I've been able to do every other thing. So let's move to a real chart and see how we can spot some of these guys. Let's move to these guys. The charts. Now zone movement. All right. Oh, we talked about liquidity here. I don't think that this great. This node. Just gonna walk the talk about. All right. So let's go down to what smaller time frame and find an order block and what an imbalance and liquidity structure break and the rest. So we're using 30 minutes to the 1 hour. This is 1 hour plus 4. can use any time frame because price is fractal. So now you can see that at this level, let's something. Let's use here for instance. You see this aggressive candle, right? Pushed higher, came down a little bit. Now this is an imbalance that has been left, and price did not fill it up. See candle 1 and candle was 3 did not touch. This is the distance between them. This is the distance between them. If you extend, you see that price came down but did not fill all of this. But if you extend in the future, you see where price came to fill it up. Look at the low of this candle, right? Extend that low to this level. You see that they're in agreement. Oh, sorry. Let me zoom in. You see that they are in agreement, or very, very little agreement. Price always comes back to what? Fill up and imbalance. If there's an imbalance in the market, it always comes to fill up. Now look at this one. This is what? Candle 1, candle 2, candle 3. This is the distance between them. And you can see how price at some point in time came back and filled up those zones, liquidated around it, came back and broke again. Price pushed and gave what a fair value here. Market came down to what make it balanced. So for every up, there's a down. Now let's look for something that had what like an order block that the price what came down to and respected our zone. Check it out for something. Let's see if we can get from the 4 hour or even the daily time frame. So supposed to see something around there. I'm looking for another block. I'm going to see that in structures. Other block, other block, other block where you other blocks with fair values is what I'm looking for. Yeah, you can see an order block here. Because you can see at this level, price what broke structure, right? This is a broke structure of EOS. And we can clearly see that this is our swing points. Swing high, swing low, swing high. For the market do your swing low, but if you use your Fibonacci, you see this is what the premium, the discount area. This is a discount area. I remember one of the conclusions that you must see them in what discount area. So now if this is a discount area, how did I get it? Some people might be asking, this is what? Swing high. Normally, I would do the swing high like this. It's just that I'm not really doing anything. So this is your swing high, and this is your worst swing low. So you want to understand that first. This is your swing low. So now you want to spot out your imbalance first, then you want to now dive deep into the reason. Now look at this market from this level to this level. At what point do we have an imbalance? At this point exactly, this one. Look at it. You can see that this is candle 1, candle 2. But you can see this level, this one, and this one, but they do not touch. There's a lot of what's fair value there. So just take a rectangle to and mark out that area. And under that area, you can see this last candle before the aggressive candle that broke smaller structure and broke a higher structure. This is seen as your what other block, the whole of this range, this one. Let me take it as your other block, your demand zone. This one is going to be in green. We see like demand. And at that point in time is where you get your entry. So it's as simple as that. So you want to see something like this. Play out. You want to see if you want to put in your long position at this level. The risk can just be low based on what it said. Below is structure, targeting a new high. You could target this level, or you could target something higher like this swing high. You know, don't target extend to the future. And I want to see how price at some point in time play out. So let's see price gets to target thing. Guys, let's say to buy 1,000 units. buying. So you bought, put your CPU up, your SL just below, right? And you let it run. All right. So we just traded $1 million. It's crazy. Not bad. 1 million to get how much? 4 points. That was like 4 million. 4.49. That's about 4 times our so you see, this is how the trade plays out. And over time, uh, because of the confluences, you would likely hit your take profit or your sell. But if you have a strong plus setup like this one, it should hit your what take profit at least 7 to 8 times out of 10 times. So that's how you trade uh, the edge. So basically like pasting this thing up so it just gets there and do what it needs to do. Where's the 3x3? And if this was a swing trading thing, we would have swung this trade for about how many days or how many weeks? I think close to 3 weeks for it to arrive at this result. So guys, that's how it is. I'll give room for questions now. If you have questions for me, shoot your questions. Or else I go back to this guy and any question, please. We have just 4 minutes before this call ends.
Okay, sorry, I have a question.
All right, what's your question?
All right, so from what you thought and from what I heard, I don't know, maybe I misquoted you. So I just want to ask, is it all other blocks that has a fair value? Or yeah, let's see that chart you drew below these guys.
Which one? This one.
Yes, this guy. So yes, this other block zone, yeah. So is it
Eh,
all other block zone that has a fair value
no, not all other block has a
or an
fair value.
imbalance?
What I said was for you to have a valid order
Oh,
block, you
so,
must have
so
what an imbalance resting above it. If you don't see an imbalance, I think that's what I said. That if you don't see an imbalance, just know that that setup is not an A plus setup. It will likely go against you. So if you see an order block, you want to see it
so
has a fair
the
value.
question is, so
Okay, I can hear
is
you.
it all
Okay, I can hear you
imbalance
now.
this in that old?
Is it all imbalance? All
So is
imbalance
it
will have.
all other block that has an imbalance? Yeah, that old, yeah.
No, 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 no. All, like I said earlier, at least 7 to 8 times out of 10 times, you'll be right. Understand? Now it's dependent on your structure and your time frame. What time frame are you judging from? Because if I say yes to this question, I stand to be corrected because if it's on a 1 hour, 1 minute time frame and you're not trending in the market, you're going against the trend, it will run you over. And I think that's one of the things that's in the notes here. We said criterias, it must be what's inside a clear premium zone, found in a trending market, appear after a break of structural liquidity grab, has clear impulsive candle movement. So this is valid. So any other thing you see outside of that would go against you. You understand? So not all imbalance hold, but all imbalance will have a reaction. But the imbalance in the right direction, the right trend, with the right criteria met, would always go in your favor. You get that?
Okay, I get that now. Thank you, boss.
All right. So any other question? We have like 1 minute 46 seconds. So if you have questions or if you're shy, you send to complain. It's that. But I feel this the way I explained it, we should be able to, even with the slides, we'll be able to like, you know, always go back to it and have this. It's self-explanatory. And regardless, always reach out. I'll be able to put you through more. Like I said, this is very crucial in the edge development that I'm teaching you guys, especially those in the intermediate class now. You guys are trying to define your edge. The next class we'll be talking more on I think sniper entry modes, order block, fair value gap, liquidity, RSI, and section filters. How to filter your sections. So that's what we'll be working on. So you guys don't want to miss that. So I'll see you guys in the next class. I really appreciate everyone for coming up. Thank you all for coming up. I have Mr. Victor, Blessing, Grace, and Promise. Thank you all for coming. See you guys in the next class, okay?
Thank you. Have a wonderful night.
You too.